COVID-19 crisis has caused that double-digit volume growth streak that Asian Paints had been successfully delivering for the last 7 to 8 quarters to be snapped. However, it's interesting to note that the commentary from the Asian Paints management was particularly positive. So yes, there was a top-line growth which was a bit larger than expected, 7% lower, EBITDA as well declined 3%. But yes, there was that margin expansion that came through because of the fact that, like we as well flagged off in the ET Now poll, raw material costs have fallen with TiO2 down almost 9 to 10% on a year-on-year basis. Monomers as well, thanks to crude, has fallen. So crude derivative prices too has fallen. The profit after tax as well was low on the back of that. But yes, the management did say that had it not been for COVID, the double-digit volume growth trajectory could have continued. In fact, for the months of Jan and Feb, they had already seen double-digit volume growth. International business, interestingly, except for certain countries, was actually a bit better, but home improvement continued to be marred by, of course, a slowdown in the real estate construction space. However, the key, like I said, is about the commentary from the management. Interestingly, they're saying that they have reached normalcy up to the extent of 60 to 70% of the pre-COVID levels. Now, brokerages, meantime, Credit Suisse has maintained and outperformed with a target at 1,850, as they say that they are seeing steady recovery, except for larger cities where obviously cases are ballooning. The Q4 volumes grew despite the COVID lockdown, which is as well pretty encouraging. And we are seeing a recovery in May and June come by, especially in smaller towns. So that too is pretty encouraging. Along with that, they believe that Asian Paints has relatively more predictability for FY22 earnings. And believe me, amidst all of this uncertainty, if a statement like this is made, it's definitely a sign of positivity. CLSA has maintained and outperformed with their target prices at 1,710. They believe that the company is riding through a difficult terrain. Restoring customer confidence, according to them, does remain a priority. And it's tepid volumes, but margin growth remains intact. But again, what we would like to watch out for is what is contributing to the sales. Is it the decorative volumes and the decorative products, or is it the low end of products, the mass products, the putty, etc.?